Welcome to part 2 of this interview with Steve Goddard, and we were just talking about Steve's 10,000 hour rule, that he felt that once he developed or spent enough time in front of the charts, how much it had actually aided him and helped him overall. Now obviously this is Steve's personal experience and everybody has their own journey to take, but let's carry on with that light bulb moment that Steve had. Steve, tell us about the light bulb moment that you had in your trading and how it came about.
Okay, well there's a strategy that we use, which is what we call a band play. I know I can't go into detail right now, but it was mentioned a couple of times, the statistical probability that when a market closed inside its bands, that it would hit the upper band. It didn't sink in the first time it was mentioned, which was probably months later. I thought, well, I've heard this before. So I had a quick back test, look through the chart. I thought, my God, yeah, this happens more than 65%. And so I just started to try it. I thought, okay, we've got to close in the bands here. Let's do it on the hourly chart. So I've done it on the hourly chart. And I've got to say I was getting sort of more like an 80% success rate. But I soon learned which ones didn't work. So across the board, it probably is 65%. But once you spot a few things going on and you think, okay, I'm going to ignore that one. Sometimes they work, sometimes they didn't. But the ones that I do particularly like tend to work 80, 90% of the time. So I've done that on the hourly chart for quite a while, and that's when I felt I'd really turned a corner. I thought, okay, now I've got something to hang my hat on. I know we shouldn't be mechanically based traders, but having been a computer programmer for a long time, my mindset is if this, then that. If this, then that, else do this. So I needed something along those lines to always fall back on while I was trying various other strategies that we've got lined up. And the band play one just really worked for me, and that is my bread and butter trade. That's what I like to do. But then as time's gone on, I've got more confident with it. I start doing the same thing on the bigger time frames. So I started to trade the 4-hourly one, and then started to look at the daily one, which is a bit scary because all those movements in between make you think it's not going to work out, but you hold your ground, keep your stop where it is, wait for it to get to target. So the band plays also helped me to understand targets. Because before joining Ezeetrader, if the market started to go up, I'd jump in. If I got 10, 15 pips, I'd close it out, only to watch it go higher. And sometimes I was right to do that. But I knew there were targets, and I didn't understand targets. And I think the bands helped me to recognise at least a first target. And then through these 10,000 hours of screen time, you start noticing other things going on.
It's the subtleties, isn't it?
It's the subtleties that you see. And you think, OK, we've got a first target here, but I think that's probably going to go a lot further than that because of something else that's happened. So you can either take half off or leave the other half on, or leave it all on and accept the loss if it goes wrong. So yeah, so those various strategies and the confidence and the time spent watching market behaviour, you start to get into a zone with it. You start to understand that, okay, I've seen this before. This is probably going to do that, so I'll put my stop here and hang on to this one. And sometimes it's wrong, but it's great when it's right.
So talk to me about timeframes. You've just alluded to them there. Talk to me about how you use timeframes.
Well, my absolute ground rule is that every time frame does the same thing. So whether you look at a 5-minute chart or an hourly chart or indeed a weekly chart, if you take the price and the timeline off, you really can't tell the difference between the two because the behaviour is the same. And it's recognising where you are within that behaviour. So you should always look at the higher time frames and then work your way back down and say, okay, I'm seeing something set up on a high time frame, and now I can trust my lower time frames to do what I think they're doing, or always see the setup coming up. So that's where you would say, oh, hang on to this one, not just go for the first band within the lower time frame. You're seeing something on a bigger one, well then hold on to it. Sure, you'll get reactions off of those levels, but if you keep your stop where it is, because you've reiterated a number of times, don't move your stop. So I took that on board, because there's been a number of trades where I've been stopped out early because I moved the stop. So keep it where
that wanting, that desire to get it to break even.
And I think, if you're going into a trade and you're accepting that loss, then continue to accept that loss until it hits target.
Good point. Yeah, I like that.
Yeah.
So, okay, so what's the minimum time frame you would go down to?
15 minutes now.
A 15-minute chart?
Yeah,
right.
I cut the 5-minute chart out. It was just too noisy. It can frighten you out of a trade. I just think, no. And with all the time frames you've got anyway, you know, it's better to trust a higher one than a lower one. So I've cut the 5-minute one out.
So what you're using then is, obviously you're not going to go into too much detail, but we're using some, what we're calling bands.
Yes.
So it's like some lines which envelop price. It's not envelope channels, before people ask, and it's not Bollinger Bands. But anyway, the envelop, and they track price.
Yes.
And so we're looking at basically standard deviation of price, and when price moves back into line, or if it's had a stretch down or stretch up or whatever.
Yeah.
And so there are times when you can buy and sell using these bands.
Absolutely. And that was my light bulb moment.
Right.
And any other strategy that you use, you can then use the bands to confirm the entry.
Yeah.
And that's when it all really came together for me. And I would say that's probably in the last 18 months or so.
Right, okay.
And so it's given me a focus now. I can say, okay, what am I looking for? So I used to come downstairs in the morning with butterflies thinking, am I going to lose a load of money today or what? I don't have that anymore because I know what I'm looking for, and if I don't see it, I don't trade it.
I do believe, yeah, I agree. Once the light bulb or whatever, and you've got that confidence through experience and whatever it is you're using, then you don't sit in front of the screens with that same trepidation.
No.
You sit in front of the screens with a confidence. Yes, I might take a loser, but it doesn't matter now.
Exactly.
And it's a different type of feeling, isn't it?
It is, absolutely. And,
So,
it's taken a long time to get there, but I could feel it's there now. You know, it doesn't make me a master trader, I know that. But it gives you a starting point to say, okay, this is what I do. This is what I hang my hat on. This is what I look for. Whatever else is going on in the markets, I don't care. If it's not doing what I want to see, then I leave it alone.
Well, that is the sign of a master trader. I mean, what is the definition of a master trader? You know, you're profitable as a trader.
Yeah.
So, you know, yes, I mean, some people will say, oh, well, a master trader does this, or they've got 30 years or 40 years experience, whatever it might be. But you've traded years gone by, you know, bits and pieces.
And I think that's all helped.
Yeah.
Yeah. Yeah.
So, from a mindset perspective, do you feel the psychology these days? Do you feel the emotions?
Yes, but not as much. I remember days where I'd have a losing day or losing trade, and I felt like a failure. And then when you do win, it's ecstatic in anything. You've got to tone all that down. You've got to treat a winner just the same as a loser. You've almost got to become like a robot, like a computer program. When it's worked, great. When it hasn't worked, great. You know, and just keep doing what you're doing. When you're working with probabilities, statistical probabilities, you know that you have to take a loser. So if you've got a hit rate of 3/4, 75%, you know that okay, I've got the loser out of the way. There's 3 winners coming along soon. Just keep trading it. You know, and it's the one you don't do that works. So you can get 2, 3 in a row wrong, and then the next one's set up, and you've lost the confidence to do it, and that's the one that makes all the money back and the profit.
Yeah, exactly. Yeah.
So, yeah, you got.
Okay. So you're there. Or certainly you're 9/10 of the way there from an emotional perspective as well. You're just comfortable in yourself. That's the main thing.
Yes.
So where do you see the future now then? What's your aspirations from a trading perspective in the coming years?
Well, the web design business, to be honest, I just don't want to do it anymore.
Right.
So I'm letting that slide with concentrating on the trading to gradually build the trading up. So there's no real rush, and if you try to do this in a hurry, you can't do it. We all know the story, the tortoise and the hare. You have to be a tortoise in this game, and I'm very much a tortoise. I'm probably a very slow tortoise, but I feel like I'm winning the game. So I just keep doing what I'm doing, and I have a 3 to 5 year plan that if I keep doing what I'm doing in the way that I'm doing it, I should have half my income coming to me within 3 to 5 years of what I need.
Yeah.
So
and you don't need anything more than that.
No.
We've already discussed that.
Yeah, yeah. So and having a business which is home based, it helps an awful lot. It really does. Yeah, to have that freedom to get up and down whenever you like without a boss looking over your shoulder it does help. For those that haven't got that luxury, they've always got the swing trading to do.
Yeah, of course.
So
very quickly, any pieces of advice that we could give our viewers before we sign off?
do 10,000 hours of screen time.
Okay, even for a swing trader, that's tough. But
yeah, I think patience.
Yeah.
And planning a trade out. If you plan a trade out, it will give you the patience. Because if you're looking at the market and you don't know what to do, wait for something to happen and then wait for the signals to set themselves up and plan a trade out. So when you know certain things repeat themselves, wait for the pattern to form. And when you see the setup, then trade it. But if you look at a market, think, I don't know what's happening next, great, then leave it alone. So unless it does what you want it to do, then don't trade it. Let the market come to you. I think it's something you've said.
It is wise words indeed. Yeah. Steven, thanks ever so much for coming on the show. That's it, time's up. My name's Charlie Burton. Trade safely out there.